Thank you very much for Semi-Korea inviting me today to speak for you at for press and the press conference, and also thank you for the invitation to speak tomorrow at the Market Forum. And the topic today is semiconductor outlook and what the semiconductor business will look like this year, 2016, and what are the critical drivers which will drive our business going forward. And as a photo in the front of the presentation, I chose a little bit of foggy because it's certainly uncertain business outlook right now. There's been a lot of uncertainty starting in a year coming from China, affecting on all areas of the world, the United States, Europe, and as well as Korea. So I'm starting the slide deck just briefly introducing VLSI Research. Since this is the first time I'm talking to press in Korea, we are a market research firm focused on economic analysis and technical business and economic aspects in semiconductor industry, and we are really focused on the semiconductor manufacturing side. In our typical customers are the very much same companies you saw here highlighted already earlier today. And we have a number of services we provide our customers, and more importantly, we run 3 websites which I do welcome you to look into. Some of them are to deliver our services, and some of them are open to public and provides you good background information about VLSI Research and what we do. Then let's move to the agenda. And I have essentially three major topics to cover. There's the current events, the downturn. Semiconductor industry was in a mild downturn over the last 6 months. The question is it over? The other thing we've seen over the last year or so is the mergers and acquisitions. It's one of the most active times in M&A, and I will touch bases a little bit on that. And there is a number of strategic shifts taking place in the semiconductor industry, and this discussion cannot be without China. And the other one is related to technology, which is IoT, and what will be the technologies, what we call the next big thing. And finally, I conclude with the brief slide on the forecast going into 2016. I like to sometimes start my presentations highlighting the top semiconductor companies in respective areas. And I also added SK Hynix to this list for this presentation. Typically I talk about Intel, Samsung, TSMC, TI, and Infineon because they represent their respective parts of the industry very well. And here I just wanted to highlight the Samsung and SK Hynix. And if you compare the major Korean semiconductor companies to the rest of the industry, performance last year was exceptionally good. If you look at the Intel, actually sales declining. At the same time, Samsung increased double digits. TSMC 5.7%, SK Hynix up 7.8%, TI down. And Infineon, very good results, over 15% growth rates. But overall, I wanted to just highlight here how well the Korean semiconductor companies did last year. And it is a result of a strong performance in the memory sectors particularly, and highlights how strong presence the Korean companies have in the semiconductor industry today. From the forecast perspective, this slide highlights the electronics, ICs, and as well as IC equipment. And I would like to direct your attention to a little bit of the history first, essentially the 2012 and 15 growth rates. And you can see here how worldwide electronics sales has grown only 2.2% over the last 3 years on a compounded annual growth rate basis. At the same time, ICs grew 5%. Essentially, that is a difference that cannot sustain for long term. And what we experienced in 2015 was essentially a correction where we saw ICs declining 1.3% and electronics growing only 0.5%. So essentially what we saw over the last 6 months was a correction of this difference. And going forward in 2016, we do expect IC sales to grow 4.1% and electronics to grow 3.7%. Then just a quick sidestep to equipment side. And essentially 2015 we are already came, the equipment sales, worldwide equipment sales came down 0.6%. And we do expect reasonably difficult year with about 5% decline, namely driven by two critical factors. We expect the DRAM related capital expenditure to be down significantly, 20 to 30% range, and at the same time we don't see any other segments really picking up that difference. The only really strong bright spot we see is a NAND investment this year, especially for 3D NAND. And without that, we would actually see much worse numbers. So that's essentially summarizes what we see out there from the semiconductor and electronics and equipment perspective for 2016. A little bit background on our forecast. One thing we track very closely in our business is electronics pricing. It tells us the supply-demand balance in the electronics. In 2015, we saw continuous pricing pressure until about fourth quarter when we started to see a pickup. And it was not definitely the worst year, but it was or the better year, but it was definitely downward trend on the electronics pricing, which has turned to improve going into 2017. And again, it is an issue for the semiconductor industry. If electronics cannot be profitable or is hard to be profitable, it eventually will affect on the IC pricing and also IC demand. Then if you look at the electronics markets, which are the critical drivers for semiconductor sales, we continue to see cell phones, smartphones continue to drive the electronics markets, showing a significant increase in the overall sales expected on 2016. We also expect PCs to rebound, and will continue to drive the IC sales. I just wanted to highlight here, for example, automotive. While it's getting quite a bit of positive press, we still don't think that automotive is a significant driver of semiconductor sales going forward in terms of overall volume. It's just that its share of total semiconductor sales is still relatively small, and having a high growth numbers doesn't necessarily turn into significant driver in the IC sales. Just a little bit highlighting, we're still what we call Internet of People, and the wearables, for example, is still a very limited market, and we don't expect to have a significant change in 2016 timeframe. And then this slide gives you a little bit more details about our semiconductor forecast. As I mentioned, 2015 minus 1.3%, and you could see there was positive areas like discrete power devices, analog 1.9%, flash memory, particularly NAND 3.8%. But there was also challenging areas. There was DRAM was down 3.1%, mainly because of a declining pricing. Microprocessor sector was down 3.9% on a weak PC demand. And then what we call other logic, which is a majority, this is a foundry business, was also down 1.7%. Going forward, we expect 2016, like I mentioned, be 4.1%. We still expect some weak areas, especially in DRAM, minus 3.6%, again, as a result of weak pricing. 2017, we do expect the industry really having a strong growth year. overall sales growing 6.7%. And I highlighted DRAM being a cyclical business. We do expect DRAM to grow almost 10% in 2017 as the overcapacity that's in place today is worked into the system. Similarly, we expect flash continue to grow well as microprocessor, auto logic, and discrete markets. So overall, 2017 looks us to be actually the strong growth year compared to 2016 or 15. So industry clearly needs some time to work out the current weakness going forward. That's kind of concludes a little bit of the current outlook, and I will turn our attention to the recent trends in the mergers and acquisitions. It's nothing new. We see this in our industry in different sectors. It's just that we're going through a strong M&A cycle, especially in the fabless semiconductor space right now. And we always see about 20-year cycle. 20-year cycle when you go from the startups to the consolidation. Here, fabless sector, startup was about 20 years ago, and we are right now going through the consolidation. And that really shows is that the industry has gone through it in a number of areas. So there's really not significantly new to the industry as well. What we like to show is how the industry changes over the time with the number of players through mergers and acquisitions. And this chart shows you semiconductor manufacturers. And in 2000 or 2001, you could easily find 40 to 50 companies actively manufacturing leading edge devices. When it's down to 8 companies by today. And essentially it's been through mergers and acquisitions and how that's been driving. If you look at the reasons why this is happening, this industry needs scale. We're talking multi-billion-dollar investments with the multi-billion-dollar revenues. It requires scale. We have factories that are easily $5 billion each, and all of these major companies spend over $5 billion in R&D on a continuous basis. We had a financial crisis in 2009, which really drove some of the consolidation actually harder than normally would have. And then we have also misinvestments in the technology where companies have made wrong choices, which has then caused them to seek partnering through M&A with the others. The similar trend is emerging in the fabless space. And essentially we see, again, tens and tens of companies in early 2000s, and really limited amount of M&A until just recently, when we suddenly started to see a significant movement up to and there was actually 4 or 5 major acquisitions taking place last year, and we really see the structural drivers here being the cost of design is going up significantly, especially going to the leading edge designs. And being first in the leading edge, that's the most expensive. Then there is the scale, either with the IP or overall scale because of the cost of designs. And then the third one is when we call the horizontals. We see companies like Apple emerging as a significant fabless captive semiconductor supplier, and it's also happening with Google, Facebook, Oracle. They all have a design operations at the different size, at the different focus. So those are essentially driving the M&A activity going forward. And then just looking at what's the kind of the drivers we see internally when the companies make their decisions. There's always the personal, there's the founder, CEO, wants to move the company to a different direction. M&A provides growth in a no-growth market or flat market space. And then there is the operational efficiencies that can be gained through combining companies. Then from the IP side, we have the issue that when the companies get large, the idea flow slows certain ways. The innovation changes shape, and the innovation moves from exponential to incremental, so it becomes more systematic rather than one idea driving the company. And then again, the scale and the scale related to innovation moves and the scale moves it from incremental innovation back to the exponential, so there is a benefits from that direction. And just to highlight that we believe M&A just started in the fabless world, and we see that there is a technology earthquake that will shift the landscape substantially, and one is what we already highlighted is the merchant fabless companies like Qualcomm or Broadcom and versus captive fabless suppliers like Apple. And then the final thing is that the difference between the logic IDM and foundry will blur. It's going to be harder to distinguish, and we see it already with Intel offering foundry services, and also the acquisition of Altera plays into that to some degree. Then just very quickly, few slides related to China. First three slides are essentially outlining the China's investment plans to the semiconductor industry. Essentially, the numbers are very large. There is multiple stakeholders. There is 20 billion here by China government fund. Essentially support IC enterprises, consolidation, competitiveness, and it also is in all areas of the semiconductor manufacturing. There is all of the local governments are part of the equation, and this is a joint venture investments between government and private equity, and essentially the numbers floated are extremely large, close to 100 billion. And Made in China 2025 policy is essentially the objective here is to move IC self-sufficiency rate to 40% by 2020 and 70% by 2025. Extremely aggressive targets. What I want to highlight here with this chart, it is a little bit busy, but essentially how actively US-based companies are participating in the action in China. You can see there is, of course, Intel Micron right in the middle. We can see HP, Western Digital, SanDisk with their own activity. Microsoft. There was a Qualcomm somewhere here. You can see from Europe, there's a Qualcomm. You can see NXP being part of it. And so US semiconductor companies are taking very active role in China related to the investment, related to establishing the joint ventures and how to benefit from this change in the industry landscape. So China is not doing it alone. It is taking place at the various shapes. Will it happen like as China envisions remains to be seen. Then I'm going to move to my last pieces of my presentation. And it will be related to what we call next big thing, IoT, and what will drive our industry next decade. First thing is there's a lot of discussion about IoT, and we continue to have a hard time to define it. What does it really means to the industry? What it means to us? What it means to the users? We can see wearables, which is a perfect example of IoT. However, we have a hard time of finding that it's going to significantly drive our industry, for example. So when we look at the IoT, we believe it is like a touch screen for the smartphones. It enables something that will drive the industry. IoT device, let's take a heart rate monitor that I wear, is a very nice device, but it doesn't drive the industry. Or some other ways we don't see that significantly driving. We expect it brings up about $20 billion in 5 years, which is a large number, but relative to the overall semiconductor industry at 350 billion, it is not that significant. Additionally, we expect it to be low cost, low profit, high volumes, and characterized by lack of differentiation at the semiconductor level. Now, if we think IoT as a low-cost automated data generator, it provides data, but what are we going to do with the data? Which then brings us back to the data center business and the cloud computing. And that provides another $20 to $30 billion of growth over next 5 years. We fully expect that to be driven by the IoT. And it is a high-value semiconductors. It includes data storage and delivery, memory, and high-performance computing devices. So the benefits for the industry are not necessarily directly on the IoT devices. It is how the data is handled, processed, and delivered. Then just to summarize here my presentation, just four summary slides here. Semiconductor industry has been in a mild recession, and recovery could be slow this year. We expect the M&A in the semiconductor industry to continue very strongly. China is playing a role, and it continues to play for years to come. And IoT will drive semiconductor business, but a little bit differently than we normally see, and the data center business is still very likely beneficiary from that perspective. The slide on the right summarizes our forecast for 2016. Modest recovery for semiconductors, 4.1%. And ICs electronics going up 3.7%, and equipment, as I mentioned, down 5%. And this concludes my presentation for today. Thank you.